Welcome to Stage 32 Talking Business. And this is all about discussing insights from the independent film industry. My name is David Zannoni, and today we have nobody less than Viviana Zarragoitia, Senior Vice President, Film and TV Finance at 3 Point Capital. Welcome, Viviana.
Thank you, David. And I'm so glad you know how to pronounce my last name because you speak my language.
Although it's originally not even Spanish because it's from the Basque country.
It's right? True, it's true. Controversial, yes.
Yeah, yeah. Well, great to have you here. We're of course Stage 32 education colleagues, and also you're also a thought leader for Stage 32, and we have worked together, of course, on many films. You as a financier for 3 Point Capital, and me as collection account manager, this lately on behalf of Freeway. But maybe you can tell us a little bit about your background, your journey into the entertainment industry, and how you landed at the 3 Point Capital.
Yes, I'll do the abridged version since I know we don't have that much time. But I have been at 3 Point Capital for 10 years this month, actually. I always started my career doing production accounting at small entertainment companies. I worked at New Image Millennium Films, then I worked at Bold Films, and I started really at Lionsgate doing accounting and finance for 5 years there, and I worked in profit participation. So obviously a world that you, David, are very familiar with in terms of doing the collection accounts. I did that on behalf of a distributor. And then I joined 3 Point 10 years ago. They started in New York about 14 years ago. So they had already been going for about 3 or 4 years before I joined. They were based out of New York doing single picture tax credit lending. And then when I joined, we were sort of looking to expand to do other types of lending. So our focus is really collateral-based lending, so tax credits and sales, distribution contracts for film and TV projects. Since being here, we've created other lines of business and other services besides lending. So we have an advisory group that advises projects on tax incentives and how to maximize them and also administer them from beginning to end. We also have a post-production accounting group. So for projects that need post-production accounting, we can help take that over once principal photography wraps and then expedite the tax credit audits. And we also have a brokerage division. So for US stateside credits specifically that are transferable, states like Georgia, Massachusetts, Pennsylvania, we can also arrange for a buyer of the credits. We lend on both international and domestic tax credits. So we've done several international tax credits as well. I would say most of our business is stateside, but always looking for the new up and coming opportunities. So I specifically work on the lending side, and that's my specialty. And I'm also an educator here at Stage 32. I've taught several film finance classes and done webinars. So I'm very grateful for this opportunity and to be doing it with you, David, since we're friends.
Yeah, no, it's great. And all the companies you mentioned, we also on the collection account management side, we've worked with all of them, and of course we're familiar with the tax credit financing. Although I guess it would be interesting for our audience to maybe explain a little bit the difference between, for example, gap financing or lending. As a production loan, for example, and tax credit financing. Maybe if you can say short way, the difference between all these sorts of financing.
Yeah, I mean, so there's different types, right? There's equity, which is sort of, an investor writing a check for a certain amount of the budget or the full budget, and it's like speculative, right? They're investing on the idea of the film. They're expecting to be repaid from the sales, the revenues of the film. Usually from a waterfall, if there is one on the project, and they don't really have any collateral. So they're basically looking to the sales of the film to be repaid. Now, on the debt side, we're lending on a specific type of collateral. So that's either a tax credit based on where they're filming or doing post-production, or any potential MGs, i.e. minimum guarantees from a distributor. So it's a finite piece of collateral, and we have a finite repayment on our loan. So whereas equity, if you finance the movie, you get any revenues that come in. Let's say your movie sells for more than what your budget and what your investment is, you can recoup all of the revenues that come in. On the loan, on the debt side, we're strictly loaning on a certain finite piece of collateral, be that the tax credits or the sales on the film. In terms of gap financing, that's typically also speculative in terms of lending against the potential sales of a film based on what a sales agent estimates that they can sell a film for. That's not something that we do here at TPC, but there are other lenders that do that. So essentially, when you get sales projections from a sales agent, the gap financing is lending against those estimates. So there's different types of investors that do that, and different types of financiers that also work with that. So typically, when you're looking at a film and how to put it together, you've got equity, you've got tax credits, you've got pre-sales, you've got sales estimates, which is gap financing. So these are typically the forms that you see. And a lot of the projects we work on have a mix of these. Sometimes projects come to us that have enough collateral between sales and tax credits to fully finance the budget. So we will lend them the full amount of the budget. Sometimes they come to us just needing a loan on the tax credit because they've got equity to cover the rest. Or they come to us with, a mix of both, where they've got some equity, some gap, and they maybe need a tax credit. So depending on what package you have in terms of creative elements, whether you have cast, whether you have pre-sales, the financing of the film is actually really determined by the creative elements that you have attached to it.
Okay, so it makes all sense to me, because as collection account manager, of course, we deal with all these sorts of financiers, and we repay equity investments, sometimes also production loans, and other sort of financing. But can you say that, just to simplify it, that equity financing is basically where the investor shares or agrees to share in the risk, whereby if you're more of a lender, there's always a collateral, so you're always providing financing, lending against something.
Correct. Yeah.
Just to simplify it.
Yeah, you see it on the collection account side, but you know that debt always gets out ahead of equity. Yeah. So debt, in a sense, is the safest, call it, because there is collateral that the lender is loaning against. Equity, by virtue of the fact that it's riskier because you're investing in the idea and the execution of the film, is inherently riskier. So I guess the way I usually describe it is, the riskier the financing, the more potential upside. The less risky, the more safe and finite your repayment is, right? So as a lender, I can only recoup from the collateral I'm lending on. I don't have back-end points. I don't have percentages that I'm getting on the film. If you're equity, you're sort of betting bigger, but then again, your potential for upside is bigger, assuming the film does well.
Yeah, makes sense. And what sort of projects do you get involved in terms of films or television or size, and how do you assess projects basically? What are the sort of projects that meet your requirements as a financier?
Sure. As a debt financier, because we're sort of the last money to come on board, my first question is always, what's your budget and how much financing do you have raised, right? Aside from what is your collateral. So those are the first three questions I always ask, because we can only come on to lend against a tax credit or a sale. If neither of those are there, or only one of two, we need to know how the rest of the film is being financed, because we can't move forward until we know that there's financing there. So let's say you just want us to do a tax credit loan and the budget's 3 million and your tax credit's 500. We need to know how the other 2.5 is being financed. So for us, it's always knowing what's the financing, how is it being structured, and is it attached for us to move forward. In terms of creative projects and budgets, we run the gamut. I mean, I would say most of our projects, the sweet spot is, I would say, 3 to 6. But we do projects that are below $1 million and projects that are anywhere from 25 to 30 million. It just depends. Especially, I think, because we have advisory divisions and other divisions that service bigger production companies and sales agents. And because on the lending side, we strictly do mostly the independent films, we're able to see projects of all calibers, right? So on the advisory side, we touch more TV. On the lending side, it's mostly film, just due to the nature of how projects are financed. Budget ranges, from what we discussed. And then creatively, I would say on the financing side, because the projects that are getting pre-sales these days tend to be, a certain genre, action, they're sort of formulaic based on what the distributors are asking for. Also very much driven by talent these days. I see the same actors involved in the same projects over and over again. So I would say that it's hard to find, let's say, an adult drama or a comedy that we're involved with on the lending side, just because those films are much harder to finance these days. A lot of the projects we see on the independent side have already some pre-sales attached and a tax credit, and they're either asking us to loan against that to cover the full budget or the majority of it, and then maybe there may be a little bit of gap or equity that's rounding out the budget. But right now, the creative is dictated a lot by what the distributors are looking for in terms of their pipelines. Yeah,
that makes total sense, and I guess this ties in with what we just discussed before. That the sort of risk you take on as a financier. So what I understand, you step in most of the times in projects where there's already a lot known and there's a lot in place already, which you can assess, which of course, again, ties in with the sort of risk that you're prepared to take on as a lender.
Yeah, and I think these days for independent film, the trends coming out of Cannes, where we both were last month, it's very hard to equity finance these days because the gamut of, you either sell a film for 200,000 or 20 million. It's a wide discrepancy. So these days, most independent film producers are basically putting a package together with talent that distributors want. They go to certain distributors, they try to get some pre-sales, shoot the film somewhere with a tax credit, and basically try to debt finance the films as much as possible, because equity is so risky these days, because it's the unknown variables of how a film is going to be received without any sales. It's much trickier these days to make a film without sales, go to a festival and try to get something sold, because distributors are pre-buying a lot of movies these days.
Yeah, cool. And then listening to, how you assess projects and the fact that you generally have several producers, co-financiers on board of projects. How do you see the relationship? So as a financier, which relationships in this industry are important or crucial to you, right? Working on these multi-party projects.
It's a very relationship-driven business. So it's, I've always been very careful throughout my career to keep all the doors, all the bridges open, because it's so tumultuous, today's assistants or tomorrow's CEOs. But I would say in our world, in terms of getting business, it's really lawyers, producers, sales agents, other financiers, bond companies. David, you and I have talked about some projects you've had me vet. So it's really everyone who's in the ecosystem, right? I mean, my world when I'm closing financing on a film is there's the production attorneys, the producers, the bond company, the financiers, the sales agents. That's kind of the ecosystem, because we all need each other. It's not like one person or one department can operate autonomously. No one can operate autonomously without the other parts. So everyone is constantly in communication, but that's the ecosystem that I live in.
Yeah, and I can I totally agree with you. And what can I say? Representing a neutral third party in this industry, right? So you're
Yeah,
right. We're I don't want to say we're running around in circles, but we do work very often with the same people. It's almost like the what is it the 20-80 rule, right? So
yeah,
probably about 20% of people in the industry are involved in 80% of the films which actually eventually make it. So you know that you have to deal with each other. We all depend on each other. Without the sales agent, the film will not be sold. Without
yeah,
the talent, the film cannot be made. Same for the producer and the same for the financier. You know, if there's no money, there's no
yeah.
film. So yeah,
It's everybody. I mean, you have to stay very open, and even though maybe you hear no a few times from somebody,
mm,
eventually you hear a yes, or maybe they have something. There's some people I've been talking to for years, and finally we're doing business together. So
yeah.
it's very important. I think you know that too, because you have such a reputation. You've been in this industry for so long. You're so respected that you understand the same intricacies.
I guess it's one of the the tools in the survival kit is indeed
Yeah,
to be respectful to everybody in this industry
yeah,
and to keep the relationships warm, right? At the end of the day. And
I mean,
always, although it can be, there are tricky elements, of course, a lot of tricky elements in the industry, because so many people, we all eventually continue to end up working together. There's no way you cannot that an issue stays without being solved, in my view,
sure.
unless somebody is really leaving the ecosystem. But that's an whole other story. But people who continue to work in this industry, generally, you have to work together again at some point.
Yeah, yeah, no, the same. And it can get tricky, like you're saying, if you have a contentious situation and you're, in the throes of production, but you also know once the dust settles, you're going to do business again with that person later on. So it just is what it is.
Absolutely. So Viviana, how do you, with all these things going on in the world in general and in our industry, from streamers, strikes, etc. How do you see the current film financing market, and what are the trends uh, from your point of view, the current trends, and how should we look at the future?
Um, I mean, I think everything is cyclical. I think coming out of the pandemic, the changes that I saw were definitely more pre-sales, negative pickup deals from distributors, less equity. Coming out of Cannes, people are saying, oh, now distributors are sort of tightening the purse strings. There might be less pre-sales out there. I haven't really seen that yet. I mean, I think it's very formulaic what distributors want, because they need certain talent to build their streaming platform. So it's all very data driven, right? So you need the certain cast that drives the pre-sale, the certain type of genre, certain type of projects. And if you have those elements, then you can get pre-sales. I think sometimes the projects that I see that struggle are a little bit an adult drama or something out of the box that's outside of the typical norm. I'm hoping that changes. I think everyone is also still trying to figure out theatrical and whether that's going to come back, because obviously the loss of that as a revenue source is also driving the prices of movies down. And by prices, I mean the MG deals. So what I see this year, especially, is as interest rates are going up, MG prices are going down. So I'm essentially having to charge more money for lower size loans, unfortunately. So, and I think all financiers feel this way. And I'm hoping, eventually things get better. Interest rates go down. Eventually we come out of the recession that we're either in or about to hit. And, maybe we figure out other means of financing and revenue sources for our industry. Because right now, with everything going to a streamer, it's really the only outlet. Releasing a film theatrically is expensive, as we all know, and the upside for collection, it just doesn't make sense economically. I'm hoping that changes because I'm an old school movie fan. I love going to the theater. But again, I always find that everything is a cycle. I think eventually we'll come out of this to a new cycle in a year or two.
Yeah, that makes sense, and same for me. I love going to the movies, but of course, that's my generation. If I look at the generation of my son, who's 11, uh, it's all devices, and it's not even watching movies anymore. It's really just a lot of short clips and videos. So I guess there's so much that's going to change, which we cannot foresee at this point.
Sure.
But yeah, we'll see. Is there anything I think we spoke about quite some topics. Is there anything you think we didn't mention, or any final thoughts from your end?
I don't know. I mean, I always want to end positively, and whenever I do panels or these things, I feel like a lot of times I do this and people are very doom and gloom, and it's like, oh, I always say there's always opportunity, right? I think the democratization of cameras and being able to make a movie on your iPhone, or the fact that cameras aren't so expensive and you don't need film, means anybody can go out and make content. I think there are more platforms now, certainly from when I started my career, to enter the industry, to submit work. You can put out something yourself and get followers, and all of this. We talk about the evils of social media, but it has also created platforms for people to distribute their work and to gain traction. So I always think if you're a creative, you don't need to move to LA necessarily. You can start writing, you can start working. Hollywood has now come to you, depending on where you are. So I say, if you're just interested in working in this industry, just start wherever you can. And especially a platform like Stage 32, which is all online and we're all connected to people all over the world. I've seen the benefit of that and what I'm talking about come to fruition. So I think it's a great time to be in our business, regardless of what others may say. And it is difficult and it is changing, but I feel this way, it's always going to be difficult and changing. It just is. I don't know that it's going to necessarily get easier in any way.
Yeah, no, and those are a couple of great things you mentioned, and in fact, the decentralization of opportunities. That's of course amazing, and it would be unimaginable maybe up till 15, 20 years ago. So you can indeed start a career or start to produce a film or content from where you're based. And also, there's probably never been as much content consumption as there is now. Whatever the distribution opportunities are, or how to get your project financed, the opportunities are there, and and the barrier to get started is potentially very low.
Mm-hmm. Yeah, I agree. And I think, again, creatively, you can start anywhere now. And I think also location-wise, you don't have to be in Los Angeles. So it just, the world has opened up, and even a platform like Stage 32, you can access people like us. And David, you and I are in different countries. So it's, people have access to us, even though we're not in LA either. I am, but you know what I'm saying?
Yeah, I'm close to Playa del Carmen, not even in Playa del Carmen. That's already too
connected
big.
through this, right? So it's what a wonderful thing. This wasn't available when we started our careers,
Absolutely not. Yeah.
But there's so much more information and education now. I think that's the biggest takeaway from me. Like when I go back and I mentor students in my college here, which is in LA, but they have a class now that's entertainment finance. They didn't have that when I was a student. So there's just more resources to be educated about our industry than ever before. And I think that's great, because everyone now has a leg up.
Yeah, that's great. And indeed, finishing on a positive note, Viviana, and just for if people want to reach you, you're on Stage 32, I guess.
Yeah,
they can
I
connect
think
with
my
you.
info is on Stage 32. I think people can find me on there, but that would be the first place to start, I would say, definitely.
Yeah. Well, great. This was great, Viviana. Great to catch up and talk on about the financing side and opportunities. Thank you very much for taking the time.
Yeah, thank you for having me, David. It's nice to do this. See you again, and I'll see you soon.
Yeah, absolutely. Thank you.